Airbnb reported fiscal year 2022 fourth quarter results that the market absolutely loved. The stock was up as much as 17% on the day following these earnings results. So I'm going to go through these earnings and decipher and let you all know what was so good about the results and why the stock price was soaring in response. If you've been following my channel since when I started just a few months ago, you will have remembered I posted a video in January highlighting my top stock to buy in 2023. And of course, my top stock to buy in 2023 is Roblox. And since I've made that recommendation, Airbnb stock is up 59.6% so far on the year. So if you've followed my recommendation, you would be up 59.6% on this stock so far. And it seems like there's more room to go for Airbnb. So let's get into these earnings and figure and look into why this stock is doing so well and why I'm so bullish on Airbnb stock. So revenue increased by 24% in the fourth quarter to 1.9 billion. Revenge travel is real, folks. Revenge travel is real. People were tired of being cooped up at home for a little more than 2 years with all these travel restrictions in place. And now that those are easing, people are getting out and traveling. That's where they want to spend their money. People are not spending their money on computers and laptops and flat screen TVs anymore like they were in the earlier stages of the pandemic. That spending has shifted and the bulk of the rebound is going into travel. Still, even though travel is rebounding with a vengeance, it's still way below where it was before the pandemic. Take a look at this stat, okay? According to Statista, in 2019, worldwide, folks spent $1.5 trillion on hotels and resorts. In 2020, that crashed to 610 billion. In 2021, that rebounded to 900 billion. In 2022, the estimates suggest that it rebounded further to 1.1 trillion. Still, in 2022, at 1.1 trillion, overall spending was still $400 billion below 2019 levels. And this is despite prices being on average 15% higher. So if we were to put it on equal footing, in 2023, folks would need to spend around $1.65 trillion on hotels and resorts to just recover to how much they traveled in 2019. That's how much room there is left in this travel recovery, one that Airbnb is obviously benefiting from. So that's why not only that's why one of the prime reasons why I recommended Airbnb stock as my top stock for 2023, not just because travel is rebounding, but when folks are choosing to travel, they're choosing to go with Airbnb. It offers more choices, it's more convenient, you get to customize what you're looking for. If you're traveling by yourself, you can get a single small room, maybe in someone's apartment. If you're traveling with your family and maybe your brother's family, then you can rent an entire home for your trip, right? So based on what you need, you can find what you're looking for on Airbnb. That's a big contrast with traditional hotels where it's more of like a one size fits all. This is what we have. This is what you have to take regardless of what your travel needs are. We have one room. You can choose one king bed or two queen beds. Those are your choices, right? And so that's partly why I'm so bullish on Airbnb, and it looks like the market is coming around to that opinion as well. Earnings per share of 48 cents was a massive improvement of 8 cents in the same quarter the prior year. Now, like I mentioned earlier, when travel crashed in 2020, Airbnb managed that prudently. They took that opportunity to trim costs and optimize the business to be ready for the rebound. And that's paying off now. When revenue is rebounding, its earnings are soaring in excess of revenue. gross bookings value increased by 20% to 13.5 billion. And of course, Airbnb doesn't own any of the inventory on the platform, doesn't own any of the listings on the platform. It merely has the platform and brings hosts and guests together and takes a commission on all of these gross bookings that happen on the platform. So the fact that gross bookings are increasing is great news for Airbnb. The number of nights booked also increased by 20% to 88.2 million. Interestingly, ADR, average daily rates, decreased by 1% in the fourth quarter to $153 per night compared to the fourth quarter of 2021. And this was a little surprising to me because this was the metric that I also follow Expedia. If you watched my video on Expedia, Expedia experienced the very same thing. ADR decreased by 1% in its most recent quarter, and Expedia's stock declined because of that, in large part due to that. But Airbnb stock held up well. In my opinion, the reason ADR decreased was a good thing for Airbnb, and that's what I have listed next. It ended 2022 with 6.6 million active listings, the highest ever on its platform. An increase in listings is great news for Airbnb investors, because that an increase in supply means that the folks that are going on to Airbnb.com looking to travel somewhere, it makes it more likely that they're going to find what they're looking for. And also, the increase in supply means that hosts are going to have to compete with each other to lower the price to attract guests, and lower prices are going to increase the consumer demand for travel, right? If the price is lower, consumers are going to be more interested to book these trips. So for that reason, the reason for the decline in ADR, I believe, was a good reason, not because falling consumer demand, but instead because of increase in supply, which ultimately is great news for Airbnb. That's where this business thrives, is when supply increases. Because remember, Airbnb doesn't own any active listings, right? It relies on hosts to list their properties on the platform. It doesn't need to spend hundreds of millions of dollars building expensive hotels. It just needs to get these hosts to list their properties on the platform. That's what it needs, and that's what it's getting, right? So that's why that's one of the longer term reasons why I like Airbnb stock, is because it runs on that asset light business model where it doesn't need to spend on expensive hotels and resorts. It just needs to attract hosts, and hosts are attracted by consumers willing to travel because hosts want to make money. And so now it's got both sides of that equation working really well, and that's really its long-lasting advantage, is when someone spends the time and effort to list their property on Airbnb's platform, they're now going to stick with Airbnb because they've already spent the time and effort getting verified, taking the pictures, going through the application, learning the platform and all of that. They are going to be less likely to switch to another platform should another platform want to take them away from Airbnb. And another good thing was that all regions saw significant growth. Up until this most recent quarter, it was most Airbnb's rebound was primarily driven by North America, but now all regions are experiencing growth now. The European travel recovery is in full steam, and China's economic reopening is creating a lot of outbound travel from China into other areas of the world, and Airbnb is benefiting from that demand as well. The good news is that management sees this strong growth persisting for the next quarter into Q1. And in 2022, the company generated free cash flow of $3.4 billion. This is another benefit of that asset-light business model. Because of that business model, this growth in revenue and earnings results in cash coming into the company. This isn't like other tech stocks that grow for growth's sake with little to no profits and negative cash flows. No, this company grows its revenue while growing its earnings and growing its cash flow. It's the trifecta, right? It's the triple play that it delivers to investors. free cash, and the company used 1.5 billion of the 3.4 billion in the cash flow to repurchase stock. And I always like when a company repurchases their stock with their own cash flow. That tells me that management believes in the company's long-term prospects, believes that the stock is undervalued. And so all good things from this Airbnb fourth quarter earnings report. And again, it's one of my top stocks to buy for 2023. And even though it's already up 50% or more so far as of this recording, I would still suggest investors to hold on to this stock for now. All right, so that's all I've got for this video. As always, I truly appreciate your viewership. I hope I've helped you make some money following my recommendations, and I truly hope I will see you again next time. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.